Good evening, guys. Ken at Tortoise Capital Nightly Strategy Podcast for December 29th, 2022. The girls are back home safe from their California road trip, so that's all good. We'll start tonight with a number of sniper trades of the day. The first one, EWZ, 3-minute chart. Yesterday's close. Here's the gap up to an OR3. It came out here, so we get the entry to the short side with the standard risk box to the downside. This was a favorable move, favorable moment right here, where after that little bit of a recovery and then started to fail, I felt pretty confident at that point we were going to be all right, and then setting a target for, coming back to yesterday's close. By this point, with price here, you should have your stop, locked into about here. You can wait for that to happen to move it down to here or to here. As long as you've locked in at least this much of a wedge, you're in good shape. Now, you did have a favorable move to here, so if you had elected to get out right there and make bank, you'd have been fine. So lots of ways to get paid on this trade right out the gate. I mean, when you have the first two bars look like this, 1, 2, and then starts to recover, I'm not offended if you take that right away. Like if you decided to get out right there and just collect that little piece for 1R, nothing wrong with that. Everything this morning, market included, was starting to fail a little bit here, so I wanted to give it a little bit more room, and I wanted to see how this was going to shape up because we have a R10 wiggle starting to happen right there. At this point, it felt really good because now we have, what would we have right here? Collapsing dragon and a still 1R move down to the previous support level, and that would be on 2 positions, and then we're good to go. And by this time, by the time you enter here, if your stop is now here, you have enough cushion that you, even if you exited everything, you'd be net positive. Now we've come all the way down. We're already back to yesterday's close. The PSAR is cooperating nicely. You've got 2 positions in. You could be thinking about a 3rd position down below this. But we got a pretty sharp reversal, or standard reversal, I suppose. So we get paid on both of those. And now, what would we call this with a stop here? What kind of entry? Supported spring crossing with a standard risk box. And we would not be surprised or offended if this got all the way back up into here. Really, the 2 demarcation lines for interesting moves. The first one would be to breach the peak of that RL10, and then the second one, the breach of this RL10. So everything up into that first RL10 is really the tactical trade space, and all we're going to try to do there is get our stop to no lose so that we can lock in that little bit of a gain. Doesn't really work. we get a scratch. I treat that as a stop and reverse. And what pattern would we call this? To the downside, again with the standard risk box. So we got lower highs. Now, if we waited for this to break, if we were looking for this as an entry, what would we call this entry? A collapsing dragon. And if we were if we take this one, we're playing a Kata 2. That's a K. And what we're doing is we're trying to front run by this much. And we want to use that space to get our risk out so that if it comes down here and tests and then breaks, then we're getting our risk out while there's a big drop. But by the same token, what that means is if it comes down to here and we get our stop to no lose plus dinner for 2, and then it starts to reverse, well, the worst thing that's going to come out of this is it will scratch, but we'll make a little money. Whereas if we wait for the confirmation of the collapsing dragon, and now we get short here and it reverses sharply, now we end up giving back a little bit in that space. So the Kata 2 front run gives us a little bit of extra play in that gray zone there. All right, so it works in our favor. The collapsing dragon hits right about there. And I want you to notice what happens when the collapsing dragon works. You get this sharp 2-bar move, which if you take a look at the size of the MMRB, that's almost 2 quick R's in a row. So one of the reasons I like to be short in this region or here is that I'm not trying to chase and get a fill while the big move is happening. I would like the big move to give me a chance to get my stop in place, to start capturing that move instead of trying to chase the move. There was, so busy admiring the trade that on this little recovery that I missed where I should have been on a 2R battle drill. It comes down to here, and then we get that first sharp move back. The R10 is turning, getting ready to cross the baby dragon. The PSAR is going to be right about here, so I got to be stalking an exit now somewhere in this region, somewhere in the dragon or at the PSAR. If I wanted a 1, 2, 3 exit, I would put my stop just above that 2-bar high, or you could be spine of the dragon or skin of the dragon. The PSAR is going to be approximately there. So 1, 2, 3, 4. Which location would you put your stop at now that you've seen this? You've seen the R10 curling. You've got a 1, 2 in position. And you're holding about 1, 2. If you take 4, you're locking in 2R. If you take 1, you're locking in 3R. So you're getting some approximations in there. So an exit at 1 would give you about a 3R. I see a lot of enthusiasm for that. This still ended up giving back about 1R, but you'd have gotten about that same exit here. That was the 1, 2, 3. So just letting the PSAR get you out. You're out in the right region. So what would we call this? I like that entry, especially because it's more than one standard risk box off the price low. It's about 1 mmRB off of the RL10. So we would call that a supported spring crossing again. And it's all tactical until it gets above this price level. Everything north of that would be an emerging dragon. That would be a clear signal of victory. This is not really much of an R10 wiggle, but you could say that if I could get 1R in hand, by the time, if it gets across here, I should have my stop out of the risk, and I should be able to at least lock in that much. By the time it gets to here, I want to at least lock in that much. Okay. And that's about what happens, turns out. It gets to 1R and starts to reverse. So I capture that little piece. Excuse me. Excuse me, right there. It comes down and the R10 hits the PSAR. So if we don't get out here, then we've got to get out there. We're in the region for thinking about a COTA 2 to the downside. We'll see how that shapes out. Yeah, I think I missed that one. On a better day, or a different day, might have had this as a short with the standard risk box, and then with this much of an advantage, we probably should be scratching that if we take that. Okay. And I think that was it for the day. I had some span of control. So this was a pretty good day in EWZ. This was making money on the downside, mostly, on a day where the markets gapped up and went up. So this is an example of how EWZ really does move differently than SPY. It's a great big index. It's a stock index. It has its own currency. But it's not strongly correlated to the S&P or Asia. It's really its own thing, along with Brazil and Latin America. Mexico and Latin America. So and it's a frog champion, so it's always on my radar. Here's one in Cliff. Now, this one started off with a great big OR3, and that was such an enormous OR3 that we never got a breakout to the upside. By the time this got that little breakdown there, I was not persuaded that was much of a move. This was so choppy, I wanted to wait to get a confirmation of the PSAR signal. And when the R10 finally rolled over and broke down, I was ready to take that one short with a standard risk box checker hold. And I would just call that one a supported fall crossing, because this is it. It's falling. It's crossing the dragon after a peak in the R10. And took a fractional gain on that one. So, I mean, this thing moved out that far, but then that sharp rebound, I couldn't let it leave the dragon and then jeopardize. I mean, I'd already lost that, so I wanted to just lock in this little piece. And I accepted that one. It's about a 0.3. Checker hold. Now, notice that this is a case where I'm expecting a lot of volatility out of Cliff, because you've seen the size of these 3-minute bars, and it's already moved from here all the way down to here. So I'm ready to wait and see the R10. When is it going to cross, the collapsing PSAR? So just notice how far away the R10 is from the PSAR when I made that exit. This was a case of not wanting to let a greater than 1R win get to scratch. So that was just preserving some sanity right there. Okay. But I'm expecting some volatility out of this one. Now, this rolls over. The dragon rejected the price. We'll see here that the R10 reverses and comes out of the dragon. So I take that one really as a Kata 2, whereas this would have been a collapsing dragon, and this most of this move has been down. So I take that one, Kata 2. And basically scratch. There just wasn't much in that one. I took the PSAR exit on that one. I stopped and reversed. It's holding support at the level that it held support. The rest of the market was starting to work. Standard risk box. Supported spring crossing pattern. Now that R10 is interesting. This is really trying to hold and go. So if I could get above here, and certainly above here, I got to decide where I want to add a second position. I have to have a second position at least by this time. If it gets above this, I got to have a second position on. This was not an unreasonable place to add a second position when it broke above this, because you're holding about plus 1R in hand, and it's starting to move up. I could live with the second position there, but it failed. So if you take that, you still have to get out at the PSAR, at the PSAR, and you'd still be good to go. That's a legitimate stop and reverse right there, which I missed. Oh. So if you take that as a stop and reverse, that's what your risk box looks like. By the time you get this move, and now it starts to reverse, here's what I want you to notice. The last place where it had buying pressure and it worked in your favor was this price level. And the buying pressure is already coming in before it ever even gets here. So this is actually a stronger turning point than this one. So if you are short from here and you see that pattern, you got to cash that right away. Because what pattern is starting to develop? Yeah, this is starting to be a Kata 2 in formation here, right? You're very close to it already. The only thing you need to see is price to come across the dragon. You basically got to be, you're planning to be long around there. The earliest you could get long would be here as a 1, 2, 3 entry. But, to me, given the resistance that was here, it spent a lot of time at that price level and could not make higher highs except peak smash, peak smash. So I'm not in that much of a hurry to get long here. I don't mind waiting to see that breakout. But the point is that if you had been short here, you've got to cash here in order to protect and preserve. Okay? So I waited for it. It rewarded right away. Now, this is one where notice how far away your PSAR stop is. If you're trailing it with 1R, this would probably already be getting you out. If you just do no lose plus dinner for 2, and you're giving it some room to work, you lock in at least that much. And then you can decide where you want to put your stop. I don't have any heartburn getting out right there after that rollover, because that's a 1, 2, 3. And I gave it one more bar, and then it came back, and so now it's making lower highs, and the R10 is rolling over, crossing the baby dragon, and I'm at the edge of the dragon. That's enough. Let's capture one and be happy, and then get back to the 0 state right away. And that was enough for me on Cliff today. I would also note that you've got an SFC there. You won't lose money on that trade. If you do a 1, 2, 3, you get that move, you won't lose money. If you wait for the COTA 2, you won't lose money on that trade. So there were a lot of opportunities in Cliff, but there were better ones today. So in the same metals group, Alcoa, 3-minute. Yesterday's close. Here's the OR3. That's the OR3 entry. There's your standard risk box. There's a quick 3. And then a resumption, standard risk box. I just think of that as a COTA 2. Standard exit, COTA 2 reentry, standard exit, COTA 2 reentry, standard exit, and the run was done. So that one felt pretty good. Taken together, all of those 3 were from our highlighted list from yesterday, and those all felt pretty good. Take a quick look at the swings. So today, let's see, we had PBW. We were ready on this one to go short, but it reversed higher, so we just tried on the long side, and it closed well. So we're holding about 2R on that one. So I'm just going to put a stop there and just say let it go. And if it breaks above here tomorrow, I'll look to get a second one in. So clean energy. U.S. Steel was a stop and reverse. So we had been short, covered on the breakout piece on the upside, switched to the long side, and that was just part of that strong move in the metals today. Real estate was an entry on the long side on a COTA 2. Cliff was no swing trade. Today was so volatile, I was happy to intraday it, but I preferred Cliff, or I preferred U.S. Steel, I should say. Treasuries was a stop and reverse, and we're a little bit in the money on that one. Devon Energy was an entry here, so we'd been long and covered, missed the short, took the COTA 2 on the long side, just as I'm looking to make some money on energy there. Let's see. This is Mexico, and we covered that one today. So this had been short. This was a stop and reverse from the long, short, and cover. Uh, was trading Brazil. Just I missed this one. I will be ready to get short this though. If it falls below, I think 50-50. We'll see how that goes tomorrow. We'll start that one off as an intraday, and no swing on Brazil. That was a good move, and I'm just happy with it. And I'm going to start both Brazil and Mexico tomorrow, just as standard intraday frog champions, and I'm willing to keep 20% of their positions as swing trades tomorrow. All right, so that's the swing portfolio update. Let's see here. Here's our 30-minute chart on the S&P. So today's move was a gap up, hit the PSAR, and then basically had a nice arc and finished strongly at 383. PSAR flipped, is giving it a nice little cushion. It's still kind of mired in this, just at the top of this chop, but it doesn't take much for this to be, above the 5-day high and ready to go. So cautiously optimistic for tomorrow. Still some rebound room on this one before it gets outrageous. 30-day on the daily charts, we're really just locked in the chop here. The holiday algorithms trading back and forth, giving us some opportunities intraday. But this is across the dragon, and the PSAR will be here tomorrow. So we'll see how that goes. Again, anything below 377 is an auto short, because that's a break, and then reinforce if it breaks below the 30-day low. So that's where we are on that one. Quick look at the sectors. Here's the S&P plus 1.8 today. The Qs and the Russell were better. Emerging markets, treasuries, and diamonds were underperformers, but everything was in the green. Tesla, a second strong day. It's up 15% in the last 2 days. So there were some tactical trading opportunities there. There's our 3 semiconductors. Were all strong today. Texas Instruments, Intel, NVIDIA. 2 out of our 3 metals were excellent today. There's Alcoa, U.S. Steel. Only Cliff underperformed the S&P. So that was another reason not to be interested on the swing. But in the metals then, Alcoa 6.3, U.S. Steel 2.7, Cliff 1.5. Sectors that outperformed: commercial real estate, oil exploration, retail real estate, discretionary, and tech is up to 2.6. The FANGs 3.8. That's a big move on large companies. Archenomics, clean energy, and biotech 4 to 4.3. Robinhood and ARK 5%. Marijuana, big recovery day, still weak, 7.3. You had Coinbase, Squarespace, Apple, Microsoft, all looking better than the S&P and better than their sectors. That's very favorable for tomorrow. That's some confidence in buying tech leaders. To the downside, silver, uranium, lithium, finance, lumber, the other lumber, materials, still above 1% or better. Here's the cut line to winners and losers. Um, Staples, Aussie dollar 0.38, Ethereum 0.21. And then the actual losers for the day. Bitcoin was flat. Oil, blended commodities, wheat, precious metals, Mexico, agriculture, Brazil, and then the VIX off 1.26. That's actually a sign of possible strength for tomorrow as well. So lots to choose from for tomorrow. See how the team traded. Tim was slightly positive in Apple today. There's his OR3. He gets long, gets paid. There was this short was a nice reversal. This should be a stop and reverse because you have a COTA 2. He waits for the PSAR break, gets a little fraction and a couple quick scratches. So slightly positive for the day. Pretty good read. I'd just like to see this get a little bit better. Given the strength that there was in the market, Apple, I think we might have had a little more confidence in the upside on that one. Alco, this is Satya. Again, smashing it. He found the mover like I did this morning. OR3. Bingo. There was a COTA 2 available here. He tries this one, stops and reverses, gets paid. A micro win and a scratch for +3. Very well done. Right by the numbers. No overnight risk. This is Tesla on a 5-minute chart. He gets the OR3 entry. Gets paid at the edge of the dragon. That's good. Stays out of the chop. The whole market started to fail, and Tesla's been so weak that he picks up a fraction for his trouble. Brings in +1 for the day on Tesla. Nice work. On to the report. Gonna run up to okay, dashboard number 1. Today's little recovery pushed the 2-day all the way up. Hardly moves the needle at all. So don't neglect this, and don't neglect bearish normal. Even though the risk is given some hints of possibilities to the upside. Sure, could happen. Tomorrow would be a good day for it. Tesla still on the weak side. Even though it's up 15% in the last 2 days, that's how far it's fallen, that it's still leading the suffering. Still plenty of auto framers in the Dow tactical and in the ETF tactical. Not many signals, kind of an inside day. Standard numbering. Goldman remains vulnerable, as does Tesla. Materials and therefore the metals. Intel vulnerable. Okay, we'll shift to the snipers. The Godzillas all paid off today, and so there's only one left in the S&P. Like Tesla's moved out enough from its Godzilla setup that it's no longer in Godzilla, but it's moving. 3 stealthy Godzillas here in our tactical symbol set. Marijuana, lithium, and Ethereum. Southwest Airlines, are they getting smashed? They got a $6 billion. Now this is how the world works. They got a $6 billion taxpayer bailout, which they did not use to improve their technology or hire new people. They gave it all to their shareholders with stock buybacks. And then people that were trying to get their canceled tickets addressed at a customer service desk got threatened with being arrested by the local police. Unbelievable, America. Hope they're not proud of that. It's a big club, and we're not in it. All right, in the NDXs, this is showing, I think, that it's still kind of fuzzy in the middle here. Even though there were a few isolated areas of strength in tech, it's still been beaten down. The key winners are still doing pretty good in the energy and industrials. And this just looks like buying oversold conditions. It's still not a movement yet. It's still holidays and low volume. So be mindful of that. I added a couple markups on the detailed pages of the report I just wanted to share with you for those of you playing along at home. So this one is really important to me. This is the slope of the RL30 over the last 10 years. And that gives you a long-term historical normal for plus or minus one standard deviation, or the normal. And this is when COVID hit. Now, I want you to notice the characteristics of volatility in this area compared to the post-COVID. Look how many times this thing has been oscillating above and beyond the long-term normal and the size of those moves. This is swing trading heaven. So now when you come down to this chart, chart 7, this takes that same piece but only takes the last 200 days and compares it against the 10-year stats. So it's just a zoom in on this portion of the chart. So these turning points, when it gets outside of 1 sigma, those are rock solid signals for shifting the bias. I mean, these two charts are absolutely crucial for understanding long-term and short-term volatility statistics and conditions. That is market condition. It doesn't register easily as, or simply as, is it bullish or bearish? Is it volatile? It's a combination. These are markets that are in flow. This one gives you a zoom in on the z-scores of 3 regression line slopes. The RL10, you see how oscillating that thing is. When it gets to those oversold conditions and make turning points, this is that last 2 days of moves that gave you a 15% move in Tesla. This is the RL30 that gives you those owl-like conditions, owl-like signals, right? And so this is already outside of Z1, so we're looking to see this has to turn before you would really say this is owl. And then the longer term is this RL90, and this is still a favorable motion. So if the 30 can hold here, if we can get some price action on the RL10, that'll cause the 30 to turn, and that'll still give us like a COTA 2, and you would see that as price with respect to the river. You would still see that as a COTA 2 confirmed by a return to about 410. It's got to get above 410 for this to be significant. And then if it gets above 430, that's the next level of significance. So you can see some longer term shape in here. I'm going to go to the last page of the report. Some folks asked me for some clarity on this one. So what I am monkeying around with on this one, this is a computation of, among other things, the frog quality number. But I don't just strictly go by that. What I'm really interested in are things that have the best trading value ratio, I call this, the TV ratio. So I compute the average range percentage, right? So that's the average range percentage of the last 30 days. So Tesla has been extraordinarily volatile, 7%, but it also has, with a standard deviation of 3 and a frog quality number of 2.8, that's a pretty reliable frog quality number, meaning it is consistently getting 7%, meaning there's lots of 7% days in there. Up or down, it doesn't matter. Whereas you could get a large average if you had some huge days and some small days and a large day and some small days. That would drive your standard deviation high, which would drive your frog quality number low. So as frog quality number goes up, you are getting a more consistent number tightly clustered around the average. So what I decided to do was to create a trading value ratio, where what I'm doing is I'm taking the range percentage and multiplying it by the frog quality number times 100. And so if I take 2.8 times 7.8, I'm getting a number up around 20, which is the best value. And then I rank it by this number. So these top 10 symbols, you're going to notice that they have two features in common. They have large range percentages relative to all of these other ones. And at the same time, they have relatively strong frog quality numbers. When you combine those top 10 things are consistently large daily range percentages. So this is normalized for price. It is normalized for volatility as measured by average daily range percentage. So these become things that are really good to trade every day. These are like frog champions. Notice what we have: Tesla, Clean Energy, Alcoa, Disney, oil exploration, Apple, Boeing, Brazil, Caterpillar, metals and mining. Well, when the sectors like metals and mining in Brazil this is why I love Brazil. It's a sector and it's got a great trading value. So everything in pink is like a Dow 30 company, and everything in blue is a liquid ETF. So these are all liquid enough to trade, and these top 10 give you some interesting candidates as you start building out your portfolio composition of what herd do you want to be tracking. You'll see that pretty good. Now, you've got some things down in here like Merck and Walmart that do not have large intraday ranges, but they have high frog quality numbers. So they're okay. They're not as great intraday trading as those things are. Whereas these other things down here that have low frog quality numbers and low rate, you have to get really tight stops intraday. They're not making these large runaway moves. So these tend to be a little more focused and stock target for the most part. There's a few very liquid ETFs in there, but you get more of your bigger, fatter indexes down here. So you just have to trade. If you want to trade the bigger, fatter indexes, you just have to accept the fact that they're not going to be as volatile on a percentage basis. But in terms of a place of trying to find things that are currently running away from the other ones with consistently large volatility, that's a place that you can look. Okay? That's on the last page of the report. All right, that's everything we got for today. Get this published and posted, and we'll be ready for tomorrow.